Hello deodorants and welcome to this new Accounting Smart class. My name is Abdul Ghani Fawad Hussain. About the tax closing, what is tax? How do you do it in You Do Well first? As a company, you need to submit your tax requirement and it needs to be done. It means that at the end of it's at the end of the month or the end of the quarter, you need to make the sum of all the taxes that you've through your customer invoices and through your vendor bills, and you need to make the sum of that and see if you more tax to the government or indeed you've paid too much throughout the do we accumulate the taxes paid and thanks to the tax grade. So remember that I talked to you about the tax. Those are there so that we can all the tax amounts in the tax report. Through the tax report, we are going to extract the amounts and to be legal organization responsible for taxes, the end of the period, the tax closing. Entry is necessary to settle all the tax accounts and put the remaining amount in. So accounting-wise, what happens is that every time you register a customer, or any entry with taxes in it, you're gonna increase so tax paid or tax received at the end of the period, you need to settle these. The balance is down to zero, and of course there's going to be because it never happens that you pay amount of tax as the tax receives. And the remaining amount should go in when the entry is posted in a due. Automatically, you're going to have the tax log day sets to make sure that you impact closed periods. So let's just see together what I mean when I talk about it. Settle the tax accounts and the tax. So I'm just going to jump into my little what happens basically in the accounting. So our customer, we're going to have A, and we're going to have our receivable. Received, which is going to be the account 4,510 in Belgium. So I've sold 100. So I'm gonna have on the income account. If you want to, it's a credit. It's going to increase on. You're going to have the 21 euros. And finally, the total amount would go on the debit side for the receivable. Same thing for vendor bill. So we're okay. So you're going to have this then. And same thing here, but we're going to, let's say we have us sold for 300 here. So here in that case, we're going to make 0.21. So you're going to have a vendor bill in the account. What happened if we put our little T's and see what happens? I'm going to have the account 4,000. 4510, I'm just going to copy information in the cheese instead. What's going to happen is that on my receivable, I'm going to have the income account and the 21 my tax. These two are my tax accounts, okay? Then I'm going to have, let me just color to see that these match together. Here and then afterwards, we're going to, on the UA, here on the debit side, where the tax on the taxpayer, here, this should go there instead. Sorry, a little mistake. And finally, the payable account on the credit side for euros. We're going to color all this like this. Okay, so this is what happens. At the end of the period, we have all our opened what we need to do for the tax. And this is what I said earlier, the tax account. So we need to make sure that those two accounts are down to zero. So the tax closing entry is going to the same accounts, okay? And we're going us. So this one is tax received and this, we need to settle the account. So I'm the contrary. So the same amount, but one. For the tax paid account, and here the received account in here, so that at the balance is down to zero here, okay? That's the most important thing but of course, if we do this on the tax paid, we're going to have 21. Here and on tax receipt, we're going to 63.